Hello guys, this is Anshuman Rao and welcome back to another video. So this video is gonna be about a trade breakdown, another trade breakdown, and this will be, this trade was a losing trade actually. So we are back at it again. I think about it has been about 1 week since we have posted the last video. So because due to the Christmas holidays and New Year holidays, the market was there was very less volume, but still then we made some gains in those period of times. And let me show you in which account I am trading, by the way. So this is the account in which I am trading. It's a $50,000 account. Actually the initial balance was $50,000, and if we see, we are overall in a positive, as you can see. So 50,000 was the initial capital and we are at 1,000 plus, so which is a little over 2% within, I guess, 1 2 3 4 5, within not within even a week. It hasn't been also it hasn't been even a week. We are, I guess, 2%, a little more over 2% in plus. So it is actually good. It's phenomenal, because if you even take out some, because after a very winning streak, I faced losing one today and I stopped it, and I exited in a very in like using my intuitive side of trading. I exited my positions today. So but the amount which I was willing to lose, I lost less than that the amount. So I will be diving into the risk management strategy also, which I used today, so that how I cut my losers straight and I lose less and win more. So let's, without wasting any time, let's jump into the video with the trade breakdown. So the trade was in gold. Actually, I trade XAUUSD, and this is the commodities chart. So not much of a difference, but I like to see the commodities chart because it is easier to calculate pips in this in the commodities chart. So all started with the daily time frame. As we can see that the daily time frame is bullish, but we can also see that there is a resistance over here, a major resistance over here. This if we consider this two rejections over here, this is actually a resistance, daily measure resistance, and this is the VIX. And if we consider the VIX, we can consider it as a common rejection point for the in the daily chart. So there are high probabilities for the candle, for the market. Actually, there are high probabilities for the market to reject from this area, because 2 days, two candles of daily time frame, they actually rejected from this area, and it is also a good resistance. So there are high probabilities for the market to reverse back from this zone over here, major resistance, or you can consider it as a common rejection point in a daily time frame. So my anticipation was, if it breaks and close above this zone, then we are good to go with this clean range over here. As you can see, this clean range over here. Let me clear this out. I don't need this for now. Actually, those zones I have marked earlier to okay, no problem, I will be marking it again. So we have this clean range actually above this zone. If the price breaks and close above this blue color zone, blue color resistance over here, which I showed you earlier. So if it breaks and close above this area, then we will be having a clear 537 pip range in a daily time frame. Obviously, it is like in day trading, it is very hard to cover 500 pips in gold. Especially, you can only cover more, max to max 100 pips. If you cover max to max 100 pips, then it's okay. Actually, it is not necessary that within one day it will cover 500 pips. It's like some days it does, like those are the exceptional days for gold. But covering 500 pips within a day is like, it's rare. So it might take 2 to 3 days or 3 to 4 days, who knows. So the daily time frame analysis was simple. I was just anticipating for the price to reverse from this zone over here. So let's jump into the 4 hour time frame. In the 4 hour time frame, what I did was, as you can see here, in the 4 hour time frame, there is not much of a market structure, but we get a clear market structure, a little bit of clear market structure as compared to the daily time frame, because it is obviously a smaller time frame, so better market structure. So as you can see here, uh, this is the same zone I have drew in the daily time frame and considered it as a major resistance, common rejection point. So this is the same zone over here, and we just have got a little bit of clear market structure over here. So without wasting any time, let's jump into the 1 hour time frame. Not much in 4 hour time frame. So in 1 hour time frame, actually, the we are just getting started. In the 1 hour time frame, why I told you that we are just getting started, because in the 1 hour time frame, as you can see, what we get to see that we have a clean resistance over here. Okay, we this is the blue zone which I have marked earlier in the daily time frame, that considering a common rejection point or major resistance marked in a daily time frame. But when we hop into when we hop into the smaller time frames, as you can see here, in the smaller time frames, what we get is a clear market structure, a clear market overview with with proper candle closings. So yeah, Wix has their own, you know Wix has their own use cases, and the candle closing itself has their own use cases. So I mostly consider candle closings, and I mostly take entries on in candle closings. So because Wicks are a symbol of uncertainty, actually, because Wicks are formed because price hasn't sustained there yet. Because price hasn't sustained there, that's why the wicks were formed. So wicks are a symbol of uncertainty. So I also consider wicks as the most important part of my game plan, that I have developed in these months, a few months, in the past, like 9 months or 10 months of trading. I consider wicks as a very, very important part in my game plan, because it denotes uncertainty. So as you can see, above this zone we have fetched a clear market structure of candle closings, as you can see here, and we considered it as again a resistance over here. So my clear overview was, as I had two, what you will say, I had two game plans over here. I was also bullish and I was also bearish, because the price is somewhere consolidating around the major resistance which I have marked in the daily time frame. But what my game plan was, if the price breaks and closes above this zone over here, which I drew, as you can see, the white zone, because considering this and also this, considering this, what you will say, like resistances, considering this resistances, I drew this resistance zone. So considering this resistances, this there are three touch points, three resistances, so it makes kind of a little bit stronger resistance zone. So if the price breaks and closes above this zone, so we have a clear, what you can say, a clear range over here of estimated of 76 pips, 75 pips, if we round off, 75 pips, and 75 pips is a good range, actually. And if we also break, if the price goes, due to high volume, if the price goes even more bullish and closes, just breaks and closes above this zone also, we also have a clean resistance over here. And the if we measure it, then it is almost around 164 if we round off 160 pips, 160 pip range, by the way, this one is, and this one is almost a 75 pip range. So yeah, I was also bullish for gold, and my bearish, in case of taking shots, my in case of taking shots in gold, my scene was, because as you can see, this trade which I'm going to break down, this was a sell in gold. So why I took this trade? Because my, actually my, what you will say, my entry plan was not my entry plan. Okay, I will be explaining my entry plan later. Actually what I was seeing most importantly is that this support over here, which the candle had, which the market had formed. So this is the support which market had formed, and if the candle, if the price, actually I did it in the 30-minute time frame, yeah, and if the price breaks below this zone and closes below this zone, I will be taking my entry. And I just stick to my strategy, and I just did it. Like, I just stick to my methodology and I just did it. And as you can see, it didn't work out, but in a longer, in a, what you will say, in a longer run, in long time period, if we will see in the long term, it works very well if we combine it with volume and price action. So there is a simple price action. This is just simple price action setups, so not much, not complicated like FVGs or order blocks or stuff like that. So this is just a zone, this is just a resistance, which we can consider it as a supply zone and demand zone. I'm just little bit confused that can we call resistance and supports as can we consider it as a supply and demand zone? So I'm little bit confused in that. I will be reading about that later, like as soon as possible I will be making videos on that also. But most importantly, this is a this candle over here, this 12:30 candle over here. So let me tell you guys, 12:30 is the time, and this time is in IST, Indian Standard Time, and according to IST, in 12:30 p.m. IST, this is when the pre-London session starts. So I also trade during pre-London sessions, and I mostly execute my orders during pre-London session and during London session, and sometimes I also trade New York session. So this is not, this is the most important thing which we have to consider. Like, the most volatile, this setups work only in the most volatile sessions, like London New York and London New York overlap. So as you can see in this 12:30 candle, as you can see, this broke below this support over here and closed below this support, and right there my entry goes, and my stop is at, actually my stop was here, which I know a little bit. Actually my stop was here, then I decided to jump in the 15-minute time frame and make it a little bit smaller stop. So I just did it till here. So, but I also booked partials when I was in drawdown, and that is the most effective way to lose less than you have anticipated. So the amount which I was willing to lose was I guess $420, but $420, but what actually I lost was $356, which is completely acceptable, by the way. This is not much of a thing. So this was just a one trade. This was just a one trade. As you can see, we booked partials also when we are in drawdown. So yeah, booking partials is one of the key thing to boost up your confidence, even if you are in a winning position or even if you are in a drawdown. Because when you are in a winning position and the price goes extremely in favor of you, and if you take something out, then you can trail your stop loss, and you are like, you will be caring less about that trade, that and the thinking inside your mind that the trade will be going again against me. So that will be that panic and that anxious feeling will be cut out, like it will be minimized if you book partials when you are winning. But when you are losing, what happens is, if you are willing to lose like let's say 1% of your account in stop loss, and you are 50% drawdown, like for example you are up, like you are down 50%, like you are willing to lose, what you were willing to lose was 1%, but you are in a drawdown of 0.5%, and when you book partials in, like when you are in minus 1 0.5%, that is where, when it hits your full stop loss, you will lose even lesser than 1%. So this is how booking partials work. So booking partials is the most effective way. And adding up, I also in this trade I also added some more quantity, because when I added more quantity, when I took entry just in this candle, and price just started moving against me, then again as you can see here, price started moving, from drawdown I was getting into break even, and after I it came into my entry price. So when it started breaking my entry price, I was my conviction of my confirmation bias which I have developed earlier, my that conviction became strong, and I just added up more quantity. But still then I lost the amount which I was willing to lose, and even as you can see, I lost the amount even lesser. Suppose, because I was as you can see here, $356. It is not even a 1% of this account. So I just care less about this loss, and this is what risk management looks like. This risk management looks like, because in the end I'm still in plus if we consider these days also, 30th of December, 31st of December, Thursday, 2nd of January, and 3rd of January. So this was all for the video, guys. Hope you enjoyed it, hope you liked it, and hope you got immense value from it, because nobody makes, like very less YouTubers make like this types of videos. So like if you are till now watching this video, then thanks and peace out.